Good morning, guys. I'm gonna quickly make a video because I'm still in vacation mode. But as you can see, Dixie is still continuing the path on the weekly candles. We still have room for this to get to the upside. We were looking for it to close above 104, like 104.30 on our drawings. It doesn't matter though. Right now, it's a bullish close. We need to basically let this close and see if we're gonna get above 105 or not before the weekly close, which I don't think we're gonna encroach on this order block over here in that 105, 106 area until possibly next week. So let me show you the daily real quick. So here's the daily. Yesterday we did put in a somewhat of a local top. Today we're actually pushing back down under that. So as we get a little bit of pull down today, we should be looking for upside push in Bitcoin, but only to a certain extent since that we are testing the back area. If we get under 104, if we get under 104.35 today with Dixie's close, then that will give you a confirmation of continuation upside on Bitcoin and ETH. While Dixie will get a pullback into this triangle consolidation, maybe all the way to 375. Yesterday, we were looking for that triangle consolidation, and what happened was we actually just, I think it was the day before yesterday, but we actually just blew up right away and busted out to the triangle, and we actually are floating up here. So that's why until we test back into 104.30, we won't know if this uptrend is continuing or not. And that's what we're looking for today is a test into 104.30. If it loses it, then upside continuation on Bitcoin and ETH is pretty much green lit. And if not, then we know that, hey, that the local top on Bitcoin and ETH will be there. And as Dixie grinds 104 and then gets to 105, 106, you'll see Bitcoin put in a local top at like 152, 54, and then roll on over, okay? So speaking of Bitcoin, let's go take a look at it right now. And give me a second. So here's Bitcoin on the daily, and what we were looking for was that consolidation in the range over here between 47.4 and 49.3. As soon as we had the open and close above 49.3, I said, hey, don't really flirt around with 50K. 50K is a psychological number. More than likely, you're going to front run it, which was here at 49.3, or you're going to overshoot it, which is us going all the way to 54,700 area because this middle area is MITRE air. I just don't trade this middle range. It's usually not gonna stop in the middle of this when I do my fibs. It usually goes to the next target. But yesterday, a member actually pointed out, hey, why don't we have a short at like 52K? And I completely understand why they were saying 52K is because of right here. If you look left, you have a little bit of a liquidity swing player pattern over here. And that's kind of really what we are flirting with right now. This level, what is that? 52,957. So that's like the last little level of resistance before the level of 54.7 that I was saying. We're flirting with this right here between here, which is 52, and this 50. 2,900. So this $1,000 area is where we're trying to mess around with and decide if we're gonna go back and test into 49,300. And then if not, are we gonna just go and test into 54, take the liquidity, and then come back down? So we're in the middle of this range. That's all three levels I have given you. You're at the 54.3 right now, or 52,300 right now. It doesn't really matter. You're in the middle of the air until you come test 49,350, or if you test 54.7. There's no real next trade for me. So that's basically the gist of what I wanted to say is that 50K was never ever a level of anything for me. It was always 47.4 and 49.3. Once 49.3 is claimed, now I'm looking for my next three levels to get tapped. And that's all the way 54,000 to 65,000. And in between these three areas, I'll find my next consolidation where I'll be trading accordingly. But right now, we are not done putting in a top. If you look on daily, you're still in bullish control zone. So you should be looking for a new high on this daily open and close, we're already made a new high on this daily candle. So yeah, unless it closes back underneath 51,800, I am not looking down at all. I'm only looking up for this weekly candle close to see where we close tomorrow, and CME for tomorrow, and then perps for Sunday. That's all that I'm looking for. And until then, I'm only looking up. Everything after 49.4 was gonna just be a short squeeze. And that's basically what's happening. Anyone who was shorting for the last 2, 3 days, they're trapped and they're gonna feel the pain until we have one last volume top. And it's probably gonna be tomorrow. It's not even gonna be today. Tomorrow we might have one last sweep of liquidity, and that might be the last rise before a rollover or sideways consolidation. Because if we're in a parabolic rise right now and we're gonna go to the moon, like 68 or whatever, and take the all-time high out, which is just 3, 4 levels away now, you're gonna do it in a quick, fast fashion. The shorts, they'll get small area triangle consolidations to do their scalp and wash out of over leveraged longs. But more than likely, the pullbacks will become even more and more shallow, and then you're just gonna rock it on up. Like technically, if you do Elliott wave theory, um, I would count this as wave one, this as wave two, this is wave three that's starting off right now. And wave three and wave five are the strongest. Like all this stuff over here, just ignore it. And you're starting brand new wave count from the low. So it's like, you could do like this one, two, and this is like three, four, and we're doing five. Or you could do this is one, two, three, and then maybe we're gonna pull back over here for four after 54, and then five will be from this consolidation range all the way to like 2, 3 levels. I would say 3 levels, all the way to 65, and you'll get like 6, 7 like over here, and then we can even pull back for an ABC, and then go back, take out highs all over. So ignore all of that. Those kind of consolidation patterns come on a higher time frame analysis. Right now, we have to put in a local high and test it and then reject it to basically say, okay, this is going to be the local high. We have no local high. We know we have a local low over here, this blue line. It's actually, I would be moving up my local low to 47.4 to 49.3, because if you're scalping longs any lower than this, you should probably not be in it, because you need to see where it's finding support before you get into a long again. Right now, if you're shorting, how are you shorting before a local top is in, before you know, hey, this is where the actual top is? If I short, this is where my stop loss is to protect myself. You don't have one of those yet because we're in air, right? The only stop loss you can have is that 52,900 level that we said from looking left, or 54,700. Yeah, that's a big far away. So if I'm going to short, I'm not going to short until these levels tap, reject, and then I can short with stop loss here with take profit with the target of around 49.3 to 47.4. I keep repeating these numbers because they are going to get tested. Okay, it's not just going to be a straight shot up. It's not going to be a straight shot down. These levels are proving for all traders moving forward that this is now a bullish order block of support. This right here is support. That's why we went up, down, up, down, up, down here to basically test what this level was. Before, when we came from the bottom, it was resistance. So you had an opportunity to take shorts off of it, whatever. This was the short from that top. Then the short died on the 100 EMA, turned into a flip of support. You took out the resistance, and now this level here is confirmed as support. And this right here is price discovery. You're trying to figure out where is resistance. Is it here? Is it in this yellow triangle? Is it in there? And then you can come back once you find resistance, confirm support, and then try to break resistance and make a new high. So from here, if we come back down here, it's not like, we're going to zero, doom, 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 blah, blah, blah. No, it's just an area for you to get picked up to go to the next levels that we are looking for. So don't get like too gung ho about us in this range. This doesn't mean shit. We were all expecting this anyway for multiple weeks. If you're like really excited right now, you better check your emotions because what's about to come is gonna wreck you. If we do start parabolic rise right now, the insanity of retail with trying to FOMO is gonna get exuberant. You will see like a $10,000 rise in a day. And that's kind of what we were looking for was a nice 10K pop for a short squeeze. So here, you're 42K to 52K. That's $10,000 in like 10 days. Okay? If you bust out the ruler over here, from this 42K till today, that is 10 days basically. So in 10 days, $1,000 a day is what we went up on Bitcoin. You don't think that pulling back another 2-3 thousand is a 10,000, right? A $2-3 thousand pullback, which would be a 20-30% pullback from this high, would be around 49.4 to 47.4. So, this is why a triangle consolidation to this level and then breaking up higher is a logical thing to expect. That's all I have to say about Bitcoin. Let's go quickly look at ETH and I will get out of here. Today, though, today's daily close maybe will give us that local top, and tomorrow we might test it and then reject it on close. So here is ETH. ETH is the one that probably would have wrecked me the most because it gave us multiple signals to short, and short squeeze was nasty style, and you took out the high. So we were looking for that resistance right over here between 2780 and 2890. And we still have that opportunity. This is what Bitcoin did. Bitcoin popped up into these two range levels, and then it consolidated and then poked right on through from 47 whatever, and then 49,400, and then it went right to like 52 whatever. Well, here is ETH very close to 3,000, and very, very possible that you're going to get there before the weekly close. The issue is today's daily close. If today's daily close is underneath 2,770, the risk of us starting the rollover to the level of 2,600 is there, okay? Because we are just about to roll over on RSI, and you might start seeing distribution. You have volume slowing down from buys all the way on the top as well. So as soon as one seller comes, you'll be a fast flush to the downside. So just be aware that ETH is getting overly bought. We are in overbought conditions. We are in bullish control. Reversion to the mean trade from this is gonna be a nasty move all the way down to like 26. So tomorrow, if we can hold this level and close above that level over here at 27, whatever, by today, tomorrow's candle can open here and then start the descent. But holding this level by daily close will bring these EMAs even up higher. So we might be testing like into 2650, uh, or maybe even like 27. And it might not be more shallow of a retrace other than right to like 27 and then just flag on out from there. So just be aware that the little consolidation that we're looking for is might be shallow. It might be like here to here. I don't know if it wants to go too much lower than that, because otherwise the shorts will be able to take profit, and they want to trap everyone above this level. And the only way to trap him and hurt him is to continue the impulse all the way up to basically squeeze the shorts out. Eventually, they flip into longs over here, and then the retrace comes. So they basically lose both ways because they don't know what the fuck they're doing. That's basically what I'm saying is don't be chasing the long right now. You don't need to chase a short. We're in an uptrend. Just wait for the short to play out. Wait for the support to get tapped and then scalp the long. I mean, why do you want to fight the trend? This head and shoulder is officially a fake out, right? This reach that it's doing, it shouldn't stop here. It should go all the way over here to like 3,200. So get ready for that coming. And this makes sense with eigenlayers, staking narrative. Like people are now about to people, you guys probably don't know, but Babylon is about to be released, and Babylon is basically staking for Bitcoin holders. That's going to bring huge FOMO back into Bitcoin and ETH because now people are getting paid to hold these freaking coins. And now the game of recycling your capital and rotating, in and out of alts into moving your profits and parking them into Bitcoin and ETH is going to be even more and more of a thing. You're going to see these things fly up because more and more people are buying it. They're rotating into Bitcoin and ETH from their shit coins, and they're putting the staking on this Bitcoin and ETH, and they're just setting it and forgetting it. Because at the end of the day, it's always going to go up because it's a limited supply, and more people now are trying to do this. Next year, I think only 600 Bitcoin are going to be mined after the halving. 600,000, sorry. That's like almost like half of the holdings of MicroStrategy alone. So MicroStrategy alone will have more than half of the next year's supply already in their pocket. People are going to be fighting over 3.5 Bitcoins a day, like every block, I mean. So it's gonna be a good, crazy time. I hope you guys structure yourself properly and position yourself properly for what's coming. I'm holding all my spot. I'm only gonna take profit on doubles, and then all of that I'm gonna rotate it back into Bitcoin and ETH. I am looking to bring so much more cash into the markets, but obviously, me being a cheap ass and watching the market go up like this, I'm very hesitant to just put it in at these highs. So I am looking for the pullbacks, and then I will be watching those supports like a hawk and trying to get into those positions I want eventually in those other coins like